everyone. I hope you're having a great day wherever you are. Today, I want to talk, of course, about what's the expectation of the near-term price trend of Bitcoin, right? And of course, also what's the long-term, and what is some of the major things that's happening in the macro level, and then how does it positively impact, in my view, the crypto and especially Bitcoin. Okay, let's just dive into it very quickly. So now, as you can see, this is the monthly chart of a Bitcoin price, right? And as you can see, right, the closing price is still much lower than the all-time high of close to 20,000 level, right? So it is still in a downward trend if you look at the higher time frame, which is a monthly level. Similarly, on a weekly level as well, it is definitely slanting downwards. It's trying to break up, right? But let's see what's happening. On a daily, this is where things get interesting, yeah? So there's a bit of up and down. It seems like it's consolidating within the last few months, right? And now it's really trying to inch up again, right? There is a clear it is a clear resistance level, right, at the 10,700, 10,800 level. That's the purple line here, right, that's trying to break through. And H4, the 4-hourly chart, which is the next lower level, it seems is a very strong level upwards, right? Mainly because of the very positive news that just came out over the weekend, right? And it's no surprise that, you are seeing this positive uptrend going up again. But let's see whether it will be staying strong, right, above that key resistance level of 10,700, 10,800, thereabouts. Now it still haven't broke through. Yeah, so this is 1 hour. 1 hour is also trying to inch up, right, as you can see. 15 minutes as well is inching up. Let's look at the 1 minute chart. Yeah, 1 minute, you see, this is about this is definitely earlier today. It's really trying to inch up again. Very strong upwards trend. If you look at the 1 minute chart, already passed over this 10,500 level mark too. It's trying to test really that 10,700 to 10,800 level. Now, it looks like it's still trying to range bound. That's what really it seems at the time of this recording. But what I expect is that, right, I think it may very well trying to go to that level of 10,700, 10,800 level. And then if it really managed to break through, then the next level is really the 12,000 level. And then if it managed to break through, I think it will try to hit the 14,000 and then the 16,000, and then it'll be very interesting how it goes from there. Of course, a key level that people are very interested in, if it can break the 12,000, then it's already very exciting, because the most recent high is about 13,000 plus, right? That's the level. And then if you can break that, people will be very excited. And of course, if it can again, of course, break the 20,000, then even more exciting. Then the next key level to look at is 50,000 dollars per units of Bitcoin. That will mean that the overall market cap of Bitcoin is 1 trillion, which is a very important psychological level. Why? Because now it's still in the $billion kind of level, which is like still a very small dwarf compared like to the giant markets like gold, right? It's 8 trillion. So you're no longer talking about billion, right? If Bitcoin reaches over 50,000 per unit of Bitcoin, that means the overall market cap of Bitcoin will be 1 trillion. Then you're entering the trillion league. Then you're talking about, then you can sit in together with the big guys, with the giants, right? Gold, equities and real estates and etc. Those are all in the $1 trillion mark, yeah. And if it hit 1 trillion, then you're also talking about Bitcoin market cap will be about 20%, about 15-16%, because gold is about 8 trillion, right? So you're talking about it will be 16% or so of the gold market cap. Then it's very exciting then, right? Because Bitcoin has always been known as a digital gold. Right, so just now we have looked at the technical analysis, right? Now let's look at the fundamental analysis. What are things happening in the macro level? Why am I now much more positive than maybe 2 weeks ago, right? Or even 3 weeks ago, when I say things will still range bound between the 10,000 level, 500 plus minus, right? And it does around there, it does hover around there. But now, because of a lot of macro things are happening in the world, and kind of confirming a lot of the expectation, a lot of the predictions, right, among economists, among people who have studied the markets, that we are going to head into a recession soon, right? But is it like a recession that we have seen in 2008, or is it a completely different one, or is it a more severe one? Then this time it's going to be quite interesting, right? But let's look at it now. So first, we have at the macro level, right, this trend where the largest economy in Europe, right, they are starting to behave like Japan, that their 10-year treasury bonds, right, is heading towards the zero level. And that means if it go to the zero level, very soon it will become negative as well, because, right, they are continuing to print. So that is one big thing that's going to happen. Next, right, because of this is not the first time we have seen, but this time is the first largest economy in Europe heading that way, which is a big thing, yeah, because Japan's already there for a long time, and that's why the economy is not really moving, and Europe is heading there, led by the largest country there in Europe. And the question is, will US follow? Next is, of course, globally as well, the negative debt. That means debt that are giving negative yield is continuing to climb, right, is heading to the 16 billion level, right? And in terms of percentage of bonds that are negative yield versus total bonds, right, you are talking about the percentage keep increasing and increasing, right, heading towards the 30% level, the highest since 2016. And if you look across the major countries in the world, most of them Europe countries, right, and you will see that, right, the different maturity of bonds, right, government bonds, is all in a negative territory. So if you quickly look at this chart, one thing that stood out to you must be the color, right? And they are so much more red compared to green. Red just means it's negative yield. What does negative yield actually mean? Negative yield means, right, you give money to, so bond is where the normal world is that you give money to the government, right, to build their infrastructure, right, to build up the economy, to support whatever initiatives, projects they want to undertake, and then the investors get back a positive returns after 1 year, after 10 years. And of course, 10 years returns should be higher than a 1 year return. That's the normal world. But you are entering into a very different world, right, where a lot of people may not even appreciate this, because these data are not even shown that commonly, right? And it just run against your common sense, because now you're talking about investors give money to the governments, right? But they're actually taking less money in return. So this is very, very weird, right? And as the other thing is, one is you can see that a lot of countries are experiencing that, mostly in Europe. Second thing is that, right, there is a inverting yield curve. What does it mean? Inverting means that longer bonds that are of longer maturity, that means bonds that are older, will give you, generally in a normal world, will give you a higher returns, because you're parking your money longer with them, right? So they are higher risk that you are taking. So of course you'll be compensated with higher returns. But now what we are seeing is, if you can look at the US one, is that the 1 to 3 year bonds, you're getting 1.5% returns, but 5 to 7 years bonds, you're only getting 1.457. So it's a reduced, right? That means if you keep money with them for longer term, they're actually giving you lower returns. This is what it means by inverting yield curve. That means the longer term bond will actually give you a lower rate. So that's why it's inverting curve. It's sloping downwards. That's what it means. Normal curve will normally slope upwards, right? Inverting just means sloping downwards. And yeah, so this is the one where I think a lot of people will get a shock, because a lot of people are not used to seeing charts like this, and this is exactly what is happening now more and more. And the analysts and the media are no longer, well, this one I actually got from 0H, which quotes JP Morgan. Again, JP Morgan are first going to be lent at institutional customers, right? Again, it will take some time before it actually get to normal people. But with 0H, news articles, this is exactly what it's going to be. Again, not many people read 0H, but so I hope if you are looking at this, please share this video along with to your all your loved ones who should know, right? Because this is the facts. They can just go and get the facts, right? It's JP Morgan. Yes, they can only quote the facts, right? So you can very well, this information are easily available, but of course it takes time to collate and compile so nicely. Next as well, right, in another view, similar message is that so you're talking, okay, so fine, you tell me a lot of the bonds are already in negative, giving negative returns, which is very absurd. Then we're talking about how severe is this problem. So as you can see, right, the percentage of bonds giving out negative returns are mostly in the 99 to 100% category if you look across all the major Europe countries. So this is a really big deal, yeah? That means that people are actually willing to take the negative returns, because they just have nowhere to park, right? Or that means something is wrong with the money. Yeah, that is just those two messages. Honestly, why would you give away money for less money now? Why would you do that, right? That means your money must be not valuable now. Next is that. So one of the biggest impact then, of course, what is the biggest impact? Definitely the banks are going to be, their profitability are the one that's going to be hit first. Why? Because then you're talking about they have to their deposit rate has to be in the negative territory. That means, yes, so you as a depositor, you are actually putting money in the bank and you have to pay the bank to keep the money for you. And also, because of this, they are also sometimes forced to actually give out negative rates loans. Yeah. So banks, of course, in a sense, their profitability will take a hit, right? Definitely, but of course they will still earn a spread, because if they give out negative rates on their deposits, they are also giving out negative rates on their loans. They will still earn that spread in the middle, but still it is a reducing trend. As you can see from the chart here, it's all going downwards over the years, yeah, last 10 years or so, across all the major countries. So household savings rates as well, right, it is very bad. So banks, just now this chart, right, banks, if the profitability is down, and banks still being the largest sector in most countries, they're going to take a big hit. And this is one of the first sign, right, that the economy is going to be bad. And that's exactly what happened in 2008, right? Because of the banks problem, right, that the fear that banks collapse will cause the whole economy to collapse, right, that the government have to step in and bail them out. And then that started the quantitative easing, which simply means they're printing out more money to just prop up the economy. And that is start of the reducing interest rates era. And now, because it has gone so low, we have to go into the negative territory. But now banks continue to lose profit, right? Despite being propped up 10 years ago, they're still losing profit now, and soon they cannot be helped anymore. Similarly, on the household front, right? So that's on the corporate, that's on the banks. On the consumer front, right? Because of the negative rates, yeah, people are actually scared. People are feeling the squeeze. So that, you see, if you put it to the banks, you actually have to pay the banks, right? Might as well you keep the money to yourself. So that means something is wrong. People are not stupid, right? People will know instinctively something is wrong. So they will rather, because of this uncertainty, they will want to save more for themselves, right? Of course, they will try to look out for what is positive returns. Let's go into that next, yeah? Similarly, across, what's the problem? The biggest problem is, of course, who saves in bonds, who buys bonds, right? Really, is your pension funds, is your insurance companies, because bonds are originally, and has been for a long time, viewed as the lower risk assets, right? That still gives you a fixed returns, right? That's why they're called fixed income assets. But because of this negative yield trend that's happening globally, and coupled with that, right, the demographics is worsening. That means people are getting older and older, and we don't have enough young people to prop up the economy. So the dependency ratio, that means people who are aged over 65 years and above, continue to increase, right? Because you don't have the young population to prop it up. So the percentage of the old people continue to climb, as you can see in this chart, again across the world. They didn't put Asia here, similarly as well. Yeah. So what does that mean? Because of the bonds cannot give you that kind of return. In fact, it's negative returns. So pension funds, insurance companies will have a lot of problem to meet their to meet their liabilities. That means when the people who want to claim their reserves, want to get their money out of the pension funds when they reach that retirement age, they are not able to actually give out all this money. It's just like if you go to the bank today, right? If everyone goes to the bank today, there are not enough money to give to all depositors. Similarly, this is going to be a problem with the pension funds around the world and also insurance companies. And what do the pension funds do? So for example, in Singapore, we just have news that they are going to increase the retirement age again from 62 to 65. So this is what they are going to do definitely. They definitely have two options. One is, right, they will try their best to move, so the pension fund managers, right, and the insurance company fund managers, they will try their best to look at what other assets that are still relatively safe but can give them the higher returns to meet their liabilities. But at the same time, they know that it will be hard anyway to move those, right? And they will continue to also squeeze the other side. That means they want to make it very difficult for people to withdraw money out of their system. So that is why, right, in Singapore, you are already seeing that there are talk about increasing the retirement age from 60 to 65. And of course, the retirement age in many Europe countries are even higher than that, right? And what they will do also is soon, when 65 is not enough, they will increase that to 68 and then 71 and so forth. This is going to happen. Yeah, trust me. It's already happening and it's going to just happen. So then that brings me then, what happens? What will they do? So most likely all these pension funds, right, all these hedge fund managers as well, and also the insurance companies, and of course investors like you and me, we will then try to look out for what else is there that gives me a positive yield, right? And equity is definitely going to be one of them. So equity is likely to benefit in this kind of market downturn, which is very interesting because we haven't seen such kind of trend before, right? It might initially go down because people are overall still very uncertain or feeling depressed or feeling pessimistic overall, right? That they might just take out money from the equity market because they want a liquidity at hand fast. But eventually, right, those people with huge money, are talking about pension funds, institutional companies with huge liquidity sitting on them, they have to find somewhere, because if they're holding cash, it wouldn't give them any return as well. So they have to look elsewhere. So equity will definitely be one of them. And that's why US dollars and equities are going to increase because, right, most of them will first flow into the US equity market. But of course, every equity market, not financial advice, but this is my take, that it will stand to gain. And also, right, crypto and the top market cap coins, especially Bitcoin, will definitely stand to gain, in my opinion. Why? Because not only it is expecting to give that positive yield, right, because of the relationship with money, because money is no longer valuable, right, and Bitcoin is the kind of money that can ensure your value, given its scarcity, right? Given it's so limited, and people will realize is scarcity even more when it comes to next year, when we are nearing the halving event in next year, May, yeah? So which is upcoming soon. So the other thing is that because Bitcoin is so uncorrelated with any of these macro events that's happening, yeah? So regardless of what happens in the world, right, bond market is going to collapse, as we have seen. Equity might collapse first, but may stand to gain because people will want to look for yield, yeah, will want to look for returns. But Bitcoin will definitely stand to gain. Why? Because this is the only one that is really not correlated. And not only that, a lot of institutional companies are now much more comfortable with Bitcoin because they've gotten the education in the past almost 1 year now, right? Since the collapse, since the since the drop in Q4 last year to today, right, is almost 1 year. And very importantly, this news, BACT, which is owned by New York ICE, right, New York Stock Exchange, they are going to launch. They have gotten the approval now. They have gotten all the necessary green light from the strictest regulator, New York regulator, that they have the green light now to go ahead and launch this physical Bitcoin futures on a September 23rd date. Now, the thing now is that they have got, yes, they have bad reputation because they have deferred their launch date for a long time, since last year actually, since the end of last year. But now at least they have gotten the green light, right? And it's been already very official in their website. So this news, which is just in about 1 month's time, right? Next 4 or 5 weeks. So this is going to be exciting. Why? Because this will give that platform to a lot. It will legitimize a lot of the big money fund managers, right? So you're talking about pension funds, institutional fund managers, all these companies with huge money, insurance companies, right, to invest some of their money into Bitcoin because of the reputation that New York Stock Exchange has, right, and the kind of security that they're given, and of course with the approval, the green light given by the regulator, right. All these are definitely a very important foundation, right, that will allow all these institutions to get into Bitcoin, right? And so you see, now there's a supply, now there's an avenue, there's a vehicle now for them to actually gain higher returns, right? Which last time they can't, right? Even if they wish, they can't, because they have a lot to lose, right? But now they have a very strong reputation player offering a very strong product, yeah, with the kind of guarantee. They have 125 million reserves as guarantee. And now with the kind of perfect storm, right, at the macro level, things are looking so bad now. Across the board, you are seeing negative yield, that all these companies, big fund managers, they have to look for somewhere else to actually look for the yield to meet their liabilities. It's simply that, right? Although yes, they can try to slow the withdrawal, but still there will be people withdrawing, right, that reach that age. So they still need to somehow look for yield, and that is why all this is very exciting, and that's why I coined the title of this video the perfect storm, right? Because demand supply is just nice now to push. All these factors should push, right? It should be a catalyst to push Bitcoin prices higher, and that's why I'm excited. But again, right, meanwhile, again, of course, having said all this is not financial advice, but one important thing is that while yes, all this news is happening, and yes, logically it should be very positive for Bitcoin and the top crypto market, but I think there might still be some kind of forces, right, that will try to push them or try to keep the Bitcoin prices down, range bound at maybe 10,000 level, or even lower to maybe 6,000 level, right? There is that probability. I don't think it's high, right? I think it might hold at the 9 to 10,000 level, although it looks like it wants to break up towards the 12K, but who knows, right? I foresee that there might be some strong hands, right, who can, who if they have a chance, they might be able to somehow influence the market enough to actually push it down with legitimately, I would say maybe with news in the media, right? So that's just the thing to be aware. But again, so all this kind of news which I talked about, which is especially the macro level, the negative yield, right? All this economy going into uncertainty, people are actually very scared because they are no longer able to, so what is money then if it's going to give you negative yield, right? And it means nothing. And also all this negative yield everywhere, why bother, right? Why bother to keep it with them? So people will then naturally look for elsewhere. And of course, then people are not educated about Bitcoin, then they will also be very scared. They have nowhere to turn, really, yeah. And of course, the view was that also the last crisis, equity was also hit. So where do they park their money? So there will be a lot of panic. So maybe in the near term, Bitcoin might also take a hit. But in the long term, that's where it is. So having said that, I just want to also caution, and I just want to, maybe just bring a note first to you. If you're one of those that will panic, right? Find some ways to make sure lock your Bitcoin away in cold storage, right? In really in your ledger, in really a cold storage form that is not easy for you to access, or is much more, it takes you a few steps to actually go. Then hopefully in that process of taking that few steps, your mind is clear, right, that you're not interested really in the current near-term price increase. Even 50,000, I'm not sure. I really, some people are saying that they might sell off a small portion just to cover their capital so that they will have less capital at risk. But to me, at least in my opinion, how I will play, I think most likely is I will keep it till the 6 figures, what really I'm looking at, right? So that's what I just want to caution you as well. If you're one of those that you're always panicky, right? You cannot take the fall from, let's say, 10K to 6K or even lower, then make sure you keep it in a very, very safe storage, right? That you do not touch, or it's very hard for you to touch, right? Because really, we are looking at the long-term target, yeah? So that's all I have for today. Hope you're having a great time, and all the best in your crypto journey, right? And all the best in your overall investment as well. Thank you so much for your time, and please like, please share this, and subscribe if you are not yet subscribed. Hit the bell so to be notified, and share this around, right? I think it's important to share good knowledge around. Thank you.